everyone. Welcome to Real Talk. We are on episode 8. We're going to talk about real estate, real life, real conversations, and have some real fun. I'm joined today with Mark Castanesina from NJ Lenders.
Hi, everyone. How are you?
Yeah, so welcome, Mark. This is your first podcast.
My first podcast.
And we're not going to call it iPod.
No, it's not an iPod. It's a podcast.
I'm sorry. I had to throw you on the bus. That was funny. He didn't call it that. He just was joking around about it. So, Mark, you said something to me recently, and you are our preferred lender at KPG, which is awesome. Doing an amazing job for myself and all the agents. You said something to me that kind of made me stop breathing recently, probably about a month ago, in a meeting, that Karen, you have no idea how many people want to sell their house and they can't. And I was like, wow. And you said it very direct, kind of loud to make a point. And I know that because I hear all the time, I have no place to go. I don't want to be homeless. There's so many things people say. And you've been talking to us about a program that you have, and I wanted to share that with somebody who wants to sell their house and has no place to go or doesn't feel they have a financial situation to go someplace. Right. So, Mark, why don't you share what the program is, and then we'll talk about that.
So we have a program that we refer to as our guaranteed backup offer.
Okay.
And this program allows our clients to not have a sale contingency and be able to buy a new house without having the sale contingency because they don't want to be homeless. They don't want to have their house sold but have no place to go, and they're nervous about it. So we have the ability to set them up with a guaranteed backup offer, which means you still sell their home for the highest price possible.
So we put their house on the market.
List it for sale.
And
we know that we can step in and provide them with a guaranteed backup cash offer so that they can waive what's referred to as their sale contingency, so they can move forward on the purchase of a new home without carrying that debt, knowing that their house is going to sell.
So I want to explain to people listening, sales contingencies right now are not something that will be accepted in this market condition. So sales contingency, what you're saying is, I have to sell my home first to buy yours, or I have to close on my house first before I can buy your home. And there's not a seller out there that needs that right now because there's so many offers or will accept it. So it removes the sale contingency, and then you as a seller become non-contingent. So Mark, they put their house on the market with us. At the same time, they're working on this program with you, correct?
Correct. We vet them to make sure they fit it, and then they know they have it in their back pocket when the time comes that they're ready to make an offer on another home, that they're confident that they can waive their sale contingency because we know we can step in and offer them this guaranteed backup offer while you may have a contract to sell on their house to sell it to somebody else, but maybe you're waiting for them to secure their mortgage financing.
Correct. So it's kind of like a security blanket.
Yes.
It's an what's that word I'm looking for? Insurance policy.
Yes.
So what's it called again?
Guaranteed backup offer.
So guaranteed backup offer. Why it's a backup is because you're going to put your house on the market and still get offers, but you're going to have this in your back pocket in case you need it.
Yes.
All right. Yes. So you're guaranteed, it's insurance, and it will get you to be able to buy a house.
Yes.
So let's talk about who this could be really great for as a consumer.
It could be great for a move-up buyer, number one. It could be great for an empty nester. So I think it could fit anybody. The most important thing is the client does have to have equity in their home to be able to qualify for it. Of course. But it's a great vehicle to help somebody go from one house to another without worrying about having that sale contingency, that they can shop with confidence that they can waive their sale contingency on their new purchase.
Yeah. So if you are an empty nester, traditionally you're sitting on tons
of equity.
Yes. So it's not something you're not handing over your deed to anybody. You're not, it's basically the upcoming newer version of a bridge loan.
Correct.
Yeah.
Exactly.
And are there two different programs or just the one?
So we can couple it with
our
bridge loan. Right?
I confused myself.
No, you were going right into it though. You're perfect. So we can couple it with our so-called bridge loan where we help that client secure a line of credit on the house they're selling to be utilized as a down payment on a new house if they don't have the cash in their bank account to put as a down payment.
So I think anybody over the age of 45 knows what a bridge loan is.
Yes,
right? Yes. But it's a older term.
Yes.
And now we have the HELOC.
Yes, correct.
All right.
Correct.
And we get calls all the time saying, hey, we have a HELOC, but they expire, don't they?
The interest-only portion of it, the ability to draw off it usually expires in about 10 years from the date of being taken out.
Oh, so we get calls like it's expiring in like 6 months.
They could have had it for that long, and it's getting to their repayment phase.
I understand. Okay. Now, also, is there right now, like let's say your house is on the market and you want to refinance or something like that, whatever, many different things. Your house cannot be listed for certain reasons. Do you know what I'm saying?
Correct.
So this does not matter.
Your house can't be listed at the time that we set up the bridge loan, the home equity line of credit. It can't be listed, but the minute you close on that and the money is now in place for you, you can now list your house for sale the next day. It's the whole idea behind it is they know you're selling your home.
Okay. So for the guarantee insurance policy, it's the same thing.
Correct.
Okay.
Correct.
So you have to, my mistake. You have to get organized,
yes.
Which most people want to be organized. If you're like most sellers, that's normal. And there are a lot of details.
Yes, I guess.
Yeah. I mean, but it's a new program to give someone success.
Give them success, flexibility, and options.
Yeah. And especially if you have low interest rates on your property, but you have equity. I mean, as I said twice before, everyone has equity. It's a great option to get you into a new home if you're outgrowing your home.
Absolutely.
I mean, there's so many people that are like, I just want a bigger home. I need a bigger home. I now have 3 kids. And we're in a 3-bedroom home. So I have 2 14-year-olds sharing a bedroom.
This is perfect for families like that.
Yes.
New babies come along and they're outgrowing their home and they're like, but I can't, my family can't be homeless.
Yes.
Well, this is the way to get them from point A to point B.
Definitely. So the other thing that I wanted to talk to you about today was the new rules coming into effect from the NJAR lawsuit settlement and who's going to be paying the buyer's commission. We talked about this briefly in our last meeting too, about the fact that buyers are going to have to, there's going to be different ways for them to pay it. So buyers will be responsible. Once again, we all feel that about 75-80% of sellers to keep as many buyers coming into their home as possible will still continue to pay the commission. Then you have the fact that the buyers could pay it themselves or do a seller concession. So unfortunately, seller concessions have been around forever, but the past, 5 years, they've disappeared. Would you say 5 years?
I agree.
Yeah.
COVID,
no seller concessions. And now they're going to be probably a third of every commission structure and part of every conversation we have with a buyer. So why don't you explain to everybody what a seller concession is? I know it, but I think it'd be great to hear it from you as a mortgage professional.
Yes. So a seller concession is basically a seller is giving, the buyer is ultimately giving the seller more money at the time of purchase to give that money back to the buyer to pay for their closing fees, or in this case, potentially their real estate commissions.
Correct. So as you know, everyone knows, I've been doing this forever. Respectfully, you've been doing this forever. 2 different lanes, but same highway. And seller concessions have always been used to pay for closing costs.
Yes.
And if they want to do work on the home and they don't have as much closing costs as they want, they can build in, let's say, $10,000 to pay for repairs on a property.
Well, they would
take their closing costs and off their closing costs to have more money. There is a percentage cap on that. I do think it's great that now they're going to be part of the industry again because it did put, first time buyers, some of them with less down payment at a disadvantage. What is there a standard guideline for seller concessions? Is it 3%? What is it?
At the moment with 5%, with 9.9% down or less with a conventional loan, it's 3% of the purchase price.
Oh my God, I was right.
Yes.
Wow.
And with 10% down or more, it could be up to 6%
Okay.
of the purchase price.
How do you think that's all going to shake out with buyers, and what are buyers saying to you, Mark, actually?
Honestly, at the moment, nothing.
Wow.
Nothing.
We've actually had some buyers come to us, and we had somebody ask us the other day in open house. So I'm interested to see when it will ripple in, I guess you would say, to the mortgage conversations.
Correct. I haven't had I had one transaction over the summer where they had to build in the cost of the realtor's commission into the contract, and they did, and it was fine. You know.
And why did they do that? To win a bidding war?
The seller wasn't going to pay the buyer's commission.
That's interesting.
And the buyer understood that the realtor works very hard for him and was doing a great job in the service that's provided, and said, no, then I'm paying it. And we put it into the contract. They asked me how to do it. I said, just increase the price up and disclose it. And
so that was our thing. So what will happen is, let's say, even in the past for closing costs, let's say you need $10,000 for closing costs. The house is $500,000. The purchase price would read $510,000 because they're actually doing $500,000.
Correct.
I always say, which is probably not a good thing to say on camera, but it's a really great way to launder money, meaning it's confusing.
Yes, it's confusing.
And I always say to my sellers, forget about the $10,000 because your purchase price, what's going to you, Mr. Seller, is the $500,000. Yep. The $10,000 has nothing really to do with you.
Correct.
Because the buyer is actually financing that $10,000. I have a question. Do you guys have to do anything different in paperwork? With the new rules coming out?
No, nothing. Fannie Mae just came out with something where it's business as usual, basically.
Well, I think it's going to be business as usual. I think what's going to happen is you're going to have people that don't follow the rules, which is not going to be us, which is always that little percentage. I do feel that it's going to really get rid of some agents that aren't really comfortable with conversations or don't have the skills for those conversations, because as you know, we practice a lot. There's fantastic agents for every company, but there's also some agents that, you know, aren't selling like they should, and I think this is going to be a really overwhelming change for them.
It could be for sure.
What do you think is going to happen with the market and rates and all, as I always say, all that fun stuff?
Yeah, I want to be optimistic that rates are going to be going down soon, but the Federal Reserve just was speaking today, and they were talking about higher for longer.
Okay.
So there's some that predict they'll start cutting rates later on this year. We have an election year, so a lot can happen at that time as well. But they do believe they're going to come down at some point. It's a question of when. There was a lot of talk it would be June, but I think it's going to be later in the year, or maybe the early part of next year, that we'll start seeing them trend down a little bit more.
Have we, I mean, time flies, and not to sound like an idiot, I don't think I remember a time in real estate history of having such low inventory in an election year.
Yeah.
Am I wrong?
No, I agree with you.
I wonder, because everyone always says, like, how's the election year going to affect things? As we all know in business, good or bad, it always has some sort of effect.
Correct.
No matter who you're voting for or believe in. I'm wondering, though, what will happen this year, if we'll even notice at this election year.
Yeah, I don't at the moment. No,
I don't think we will.
At the moment, no.
I really don't think we will.
I don't see a thing.
And I just thought of that myself.
Yeah.
So, what's your favorite part about your job, Mark?
I love helping people meet their goals, meet their dreams. Being a homeowner is a dream come true for most people, and I love helping people achieve that.
Yeah.
You know, that's the high for me. That's what keeps me going every single day.
Yeah.
You know.
And also the win, right? Getting them closing for them, though.
Yep.
I think I told you once that I was able to go to a second walkthrough after we closed, and we never get to see the buyer walk into a home once they close it. You don't get to see any of that.
I don't see any of it.
Yeah, that's
They don't want me. They just want my money.
They just want that darn mortgage.
That's it.
All right. And busy. You guys are really busy. Yeah. So how many pre-approvals are you and your team issuing a week?
That's a loaded question. I would say at least 20 to 40 a week on average, depending on what time of year it is.
Yeah, that's crazy. Yeah. And do you find that, I mean, I know so many agents that I respect that also use you. I know if we get an offer on one of my listings and it's NJ Lenders, it is respected. Thank you. And they definitely, like, I'm like, oh no, they're good. That's who we use. And our sellers are very comforted by that. What percentage of your business, like what's your annual increase? Do you know what I'm talking about? Am I making sense at all? With it,
so I make sure I'm on the same page with you.
Last year you did how many loans?
212, I believe was the exact number.
So is it from the same realtors all the time, consistently? I guess that's my question. Or are there different realtors that come in and out? Do you always see the same names in your business?
I see a lot of similar names on a whole, as far as realtors are concerned. And then a lot of my businesses as well as past client referrals.
Of course, so. And is there any refi business out there?
Very small. Yeah. Very, very small right now.
Yeah, completely changed.
Need bases, maybe matrimonial situations, things like that.
Oh, that's a good point. Yeah. So, all right, anything else you want to add about the mortgage business and your philosophies or thoughts here?
No, just buy. It's a good time to buy.
It is a good time to buy.
It's a good time to buy. And, if you're going to be in your house for 15, 20 years, it doesn't really matter.
Well, I also always say that when my, people bought houses and the rates were high, and no one thought they would go down, and those rates were not realistic.
Yeah, when I started, rates were in the 9s.
Yeah, so no one complained.
Yeah, no.
We had a client recently that they came in to us and they were looking at about $800,000 when it was 3%. And right now people are moving because of the D's, right? You know the D's? Yes. Diamonds, divorce,
diapers,
death, diapers. What's the other one? Diplomas. I did it. Schools, yes. Yeah, got it. So she got pregnant with their second, which was wonderful. And they ended up buying a house. You did their loan, actually. And they were in the 6s. And they increased their price point by hundreds of thousands of dollars. And they never mentioned rates to us once. So I think that the consumer is less caring in a way about rates than the realtors, because if you need to buy a house, you're going to buy a house. It's just normal real estate practice.
Correct. I just heard something on the news that the consumer is getting more accustomed to where the rates are now. That where they were during COVID, it's behind us.
It's not realistic. I mean, no one thought that COVID would ever happen, and no one thought rates would ever go that low. And that's not reality. This is reality. Correct. Well, Mark, thank you so much for sharing your insight and also sharing that really great program, which I think will help people.
Absolutely.
We're going to be talking a lot about it over the next couple of months. We're doing a seller seminar in May about it. So I really appreciate you. So thank you so much.
Thank you for having me.
All right. We'll see you next time on Real Talk. Have a great day, everybody. Take care.